Not a surprise what happened 1 hour ago at the Federal Reserve, but if Donald Trump is elected president, the experts are saying that that would be what Wall Street calls a black swan event, an unexpected development that rattles the markets. But putting the election uncertainty aside, folks, there is another question mark that could send investors running for cover. That's the looming interest rate hike that is likely to happen in December. Wall Street Journal chief economics correspondent and all-around Fed expert John Hilsenrath joining me now. John, you cannot be surprised, none of us can be, by the fact that the Fed didn't move today. But would you raise an eyebrow if Janet Yellen doesn't hike rates next month?
I certainly would. You know, what they said in today's statement was that they're starting to see signs that inflation is picking up. So they were a little bit more out in front on that, and I took that as a pretty strong sign that they really expect to move. Something very unexpected would have to happen. You know, for instance, you mentioned Donald Trump. If Trump is elected and there's a lot of market turmoil around the uncertainty of that election, maybe that could do it. If there's some kind of shock from outside of the U.S., but what they said today was that all systems are go for a rate increase in December.
Okay. Specifically, they said the case for an increase continues to strengthen. However, they need further evidence before moving. Well, then they're going to be waiting till 2040. I mean, further evidence, there's always going to be a sort of morphing of evidence, is there not, John? What are they talking about further evidence?
So this is where we get into real tea leaf and Fed watching. So you read the key line there. They inserted a word this time. They said they need some further evidence. So what they're trying to say is they don't need to see a lot more evidence, that they've already seen a lot of evidence. They just need another decent jobs report, and they'll be ready to go.
Okay. How would the Trump presidency specifically change the Fed's plans?
Well, I mean, a Trump presidency in and of itself wouldn't change the Fed's plan, but if the markets respond to it in a way which is very surprising, then that could affect the way the Fed sees things. So, you know, we saw the markets sell off after Brexit, and the Bank of England responded to that. So if we see big declines in stock prices, if we see big movements in the dollar or in bond yields, that could affect the Fed's thinking. But at this point, they're really trying to say as clearly as they can that all systems are go for a move in December. And the market is priced that in. There's more than a 70% probability in futures markets that they're going to go.
I want to look at gold. Look, there are a couple of things that have been reacting pretty dramatically, but specifically today, you have the Swiss franc spiking. You have gold jumping, now above $1,300 a troy ounce. The yen even looked like a flight to quality. What are people flying away from? We are not in an emergency economic state anymore as we were for several years after the financial implosion and crisis.
You know, I think people are waking up to something that the Fed was waking up to in its statement today, which is that, you know, inflation has been so low for so long. It's been under the Fed's 2% goal for more than 4 years. And we're starting to see some signs that it's picking up a little. Now, putting aside what happened with oil prices today, we've seen some firming of commodity markets. And if you also look at consumer price inflation measures, and if you look at inflation expectations measured in bond markets, if you look at bond yields are rising. What the markets are telling us and what these data are telling us is that inflation is starting to creep a little bit back in there. It's not anywhere near running away, but it's getting back up to that level that the Fed's been talking about for so long.
Showing signs of life. John, lovely to see you. Thank you so much.
Yeah.
John Hilsenrath,
great to be here. Thanks
the
a
Wall
lot,
Street
Liz.
Journal chief economics correspondent.